Namaste dear students, welcome back. So today I am here with one more illustration number 14. So which has been asked in the year November-December 2010 question paper, University of Mysore. So let us look into the problem. Gautami Company Limited went into voluntary liquidation on 31st 12/2009. The balance sheet as on that date was as under. So liabilities 5,007% preference shares of rupees 100 each fully paid 5 lakh rupees. 2,500 equity shares of rupees 100 each rupees 75 paid 1,87,500. 7,500 equity shares of rupees 100 each rupees 60 paid 4,50,000. 5% mortgage debentures 3 lakh rupees. Then outstanding interest on debentures 15,000 rupees, creditors 3,10,000 rupees. On the asset side, land and building 2,55,000 rupees, machinery 6,20,000 rupees, patents 1 lakh rupees, stock 1,37,500 rupees, debtors 2,75,000 rupees, cash at bank 75,000 rupees, and P&L account 3 lakh rupees. So both the side total 17,62,500 rupees. 17,62,500 rupees. Further, the liquidator is entitled to a commission of 3% on all assets realized except cash and 2% on amount distributed among unsecured creditors other than preferential creditors. Creditors includes preferential creditors of rupees 35,000 and a loan of rupees 1,30,000 secured by a mortgage of land and building. The preferential dividend was in arrears for 2 years. The assets realized as follows: land and building 3 lakh, machinery 5 lakh, patent 75,000, stock 1,50,000, debtors 2 lakh rupees. The expenses of liquidation amounted to rupees 27,500. Prepare liquidator's final statement of accounts. So dear student, this is the problem. It is a regular kind of problem. There is no any extraordinary adjustment, but it is the normal with a normal kind of adjustments the problem is. Okay, so here you have to be careful about three part. One is on the liability side, while settling the preference shareholders, there is a dividend. We have to calculate 7% dividend on those preference shares, and then 2,500 equity shares. So on that 100 rupees each that we consider while doing a working note. So that is amount to be brought in or paid to the equity shareholders, and at the same time 7,500 equity shares. So 60 rupees paid there also we consider at the time of doing working note. Then debenture is there, then outstanding interest on debenture is there, that is also we should consider, and all the assets they have given, that has been realized value also given. So here you have to understand carefully, the liquidators is entitled to a commission of 3% on all assets realized except cash. So we don't consider cash even in a normal time. If we don't give also we don't consider. And 2% on amount distributed among unsecured creditors. So that means we have to find out unsecured creditors value. For that, in supportive, he has only given in the problem then that other than preferential creditors. So we should not calculate on preferential creditors, because other than preferential creditors they set. So creditors include preferential creditors 35,000 and a loan of rupees 1,30,000 secured by a mortgage on land and building. So there is a secured creditors, there is a preferential creditors. So we have to deduct that from the creditors value to identify the unsecured creditors. Okay, so that's all. So let us start the solution part for illustration number 14. So let us begin with the table. So let us start. Students, I am ready with the table. Solution for illustration number 14. Liquidators final statement of accounts in the books of Gautami Company Limited. Particulars rupees, particulars rupees. I hope you also ready. So first what we are going to write? Yes. Realization of assets. Realization of assets. So that ending. So under that first we are going to write secured assets. Surplus value of secured assets. Surplus value of secured assets. So in the problem he has given any secured assets? Yes, no. So just check out the problem. Yes, it is there. See, the liquidators is entitled to a commission of 3% on all assets realized except cash, 2% on amounts distributed among unsecured creditors other than preferential creditors. So after that, he says creditors include preferential creditors rupees 35,000 and a loan of rupees 1,30,000 secured by a mortgage of land and building. So for 1,30,000 rupees, land and building has been secured. Correct? For 1,30,000 rupees. But what is the realized value of land and building? 3 lakh rupees. So secured asset is land and building. Realized value of land and building is 3 lakh rupees minus secured against how much? Mortgage loan of rupees 1,30,000. Loan of rupees 1,30,000. So 3 lakh minus 1,30,000. How much? So 1,70,000 rupees. So this is the surplus value of secured asset. Okay. So next I am going to write free assets. So let us record all the assets other than land and building. So we have machinery realized for 5 lakh rupees. Machinery realized for 5 lakh rupees. Then we have patents 75,000 rupees. Patent 75,000 rupees. Then we have stock for 1,50,000 rupees. Stock 1,50,000 rupees. Then we have debtors realized for how much? Debtors got realized for 2 lakh rupees. So now total all of this. So you're going to get free assets total value. But before that, don't forget to add cash in the old balance sheet. So how much cash at bank? 75,000, correct? Cash at bank. $75,000. Now total it. 5 lakh rupees plus 75,000 plus 1,50,000 plus 2 lakh plus 75,000. So put together 10 lakh rupees. So I got the value of all the assets realized 10 lakh rupees. So that's all in the debit side of the liquidator's final statement. So let us move to the credit side. So first item always we write what? Secured creditors. So how much you are going to write? Nil. Why nil? Already we have paid out of 3 lakh rupees, 1,30,000 has been cleared. So it has been cleared. So it is nil. Okay. So immediately after that, liquidation expenses. So is there any liquidation expenses? The expenses of liquidation amounted to rupees 27,500. So then write liquidation expenses. Liquidation expenses. So how much liquidation expenses is? 27,500 rupees. 27,500. I have written that. So 27,500 rupees done. So next is liquidators remuneration. So what we are going to do, calculate liquidators remuneration. So under that, point A is the liquidator is entitled to a commission of 3% on all assets realized except cash. So 3% on all assets realized. 3% on all assets realized. So now what are all the assets realized? This is 10 lakh and this is 3 lakh. So first I am going to write land and building 3 lakh. Getting my point. Plus 10 lakh minus 75,000 because we don't include cash at bank. 10 lakh minus 75,000. If you do that, how much you are going to get? 9,25,000. 9,25,000. So now calculate 3 lakh plus 9,25,000. That comes to 12,25,000 into what is the percentage? 3%. Calculate 12,25,000 into 3%. That comes to 36,750 rupees. How much? 36,750 rupees. Okay. Then immediately says 2% on unsecured creditors. 2% on amounts distributed among unsecured creditors other than preferential creditors. So they said other than preferential creditors, 2% on unsecured creditors. So now how much is the unsecured creditors in the problem they have said? They have not said, so we have to calculate unsecured creditors. So let us move to the working note part. So I am starting the working note number 1. Working note number 1. So that is calculation of unsecured creditors. Calculation of unsecured creditors. So now to calculate this, first we have to write total creditors given in the balance sheet. Given in the balance sheet. So how much total creditors given in the balance sheet? 3,10,000. 3,10,000 rupees. Less secured on land and building. Secured on land and building. How much secured on land and building? 1,30,000. So deduct that 1,30,000 rupees. So 3,10,000 minus 1,30,000. That comes to 1,80,000 rupees. 1,80,000 rupees. So now less preferential creditors. Less preferential creditors. How much preferential creditors is? 35,000 rupees, which they have said in the adjustment. So deduct that 35,000. 1,80,000 minus 35,000. That comes to 1,45,000 rupees. 1,45,000. Do we have any bills payable? No, right? So then this is the ultimate unsecured creditors. Unsecured creditors, that is 1,45,000 rupees. So now we got the unsecured creditors value. How much? 1,45,000 into 2 divided by 100 into 2%. That comes to 2,900 rupees. 2,900. So now total it 2,900 plus 36,750, 39,650 rupees. 39,650 total. 39,650. So now you might be wondering why I have not considered preferential creditors while calculating liquidators remuneration. See, in the problem is very clear, crystal clear. He said 2% on amount distributed among unsecured creditors other than preferential creditors. Other than preferential creditors means you should not calculate on preferential creditors. So that is why I have not calculated. If he says only on unsecured creditors, then we will calculate. Other than preferential creditors, we don't calculate the remuneration for the liquidator. Okay. So now let us clear other liabilities. So first we are going to clear debentures. So now write down debentures. So how much debentures value is given in the problem? 5% mortgage debenture 3 lakh rupees. So 5% debenture 3 lakh rupees. Then there is a outstanding interest, correct? Outstanding interest, add outstanding interest. How much outstanding interest in the problem they have given? 15,000 rupees. Outstanding interest 15,000 rupees. So now total it, put it to outer column, 3,15,000 rupees. 3,15,000 rupees. So we have settled the debenture holders. So now let us settle preferential creditors. Preferential creditors how much? 35,000 rupees. Directly I am settling 35,000. So after this we are supposed to settle unsecured creditors. So I am settling unsecured creditors as well. Unsecured creditors how much? Look at the working note number 1. 1,45,000 rupees. So I have settled. You can see there or you can look at here. 1,45,000 on unsecured creditors. So 1,45,000 unsecured creditors I have cleared. So next is preference shareholders are there. That is 7% preference shareholders. 7% preference shareholders. 7% preference shares we have to settle. So how much is the 7% preference share capital? 5 lakh rupees. So I have written that 5 lakh rupees. So in the problem is they have given any adjustment? Yeah, look at that adjustment that is after preferential creditors. Creditors include preferential creditors rupees 35,000 and a loan of rupees 1,30,000 secured by a mortgage of land and building. The preferential dividend was arrears for 2 years. For how many years the preferential dividend is arrears? For 2 years. So now calculate 5 lakh into 7% into how many years? 2 years. So that is 5 lakh into 7% into 2. That comes to 70,000 rupees. So 70,000 rupees is add outstanding preference dividend. Okay. So that is 70,000 rupees. So now add and put it to outer column, that is 5,70,000 rupees. So I am writing that 5,70,000 rupees. The total I am just copied to the outer column. Okay, 5,70,000 rupees. So anything is left? Nothing. Almost have done. So we have settled all the payments. Now we have to check the amount available to equity shareholders. Amount available to equity shareholders. How do we get to know? So by doing the total 1,70,000 plus 10 lakh. 11,70,000 total. How much? So I'm going to write it here. 11,70,000. 11,70,000. So how much the amount we have settled? If you look at the amount settlement, 27,500 plus 39,650 plus 3,15,000 plus 35,000 plus 1,45,000 plus 5,70,000. So total amount we have settled so far 11,32,150. 11,32,150 rupees we have settled. So then the difference is how much? So difference is 11,70,000 minus 11,32,150. Difference is 37,850 rupees. 37,850 rupees. So now we have to calculate the working note to identify the amount we brought in or paid to the equity shareholders. Okay. So let us move to the working note number 2. Working note number 2. So under this write down calculation of the amount available for equity shareholders. Calculation of amount available for equity shareholders. So first write down total paid up equity share capital. Total paid up equity share capital how much? So 2,500 equity shares of rupees 100 each, rupees 75 paid. So that is 1,87,500 rupees. 1,87,500. Then 7,500 equity shares of rupees 100 each, 60 paid. So that is 4,50,000 rupees. So total paid up capital is 1,87,500 plus 4,50,000. Put together how much? 6,37,500. So that is 6,37,500. So understood how we got 6,37,500? Yes, that is correct. So next, less cash available after paying for preference shareholders. Less cash available after paying preference shareholders. How much preference shareholders after paying them? We have got 37,850 rupees. 37,850. So 6,37,500 minus 37,850. Minus 37,850. So loss to be borne by 5,99,650. So that is loss to be borne by equity shareholders. Loss to be borne by equity shareholders. 5,99,650 rupees. So we have identified loss to be borne by equity shareholders. So now let us calculate a loss per share. Loss per share equals total loss divided by total number of equity shares. So total losses 5,99,650, 5,99,650 divided by total number of equity shares. How much? So that is, read out the problem. The problem says 2,500 equity shares of rupees 100 each, paid 75, and 7,500 equity shares of rupees 100 each, paid 60. So total number of shares is 2,500 shares plus 7,500 shares. So put together 10,000 shares. So 5,99,650 divided by 10,000 is 59.965. 59.965. 59.965 is the loss per share. So that is 5,99,650 divided by 10,000. So 59.965. 59.965 is the loss per share. Okay. So now we have to calculate amount to be received or paid to the equity shareholders. Okay. So next, working note number 3. Calculation of amount to be brought in or paid to equity shareholders. Amount to be brought in or paid to equity shareholders. So now this 2,500 shareholders paid how much? They have paid 75, right? So 75 minus losses 59.965. So difference how much? Find out. 75 minus 59.965, 15.035. That is 15.035 into 2,500 shareholders. So 15.035 into 2,500 shareholders, that comes to 37,587.50. So this is for 2,500 shareholders. Okay, 2,500 shareholders, equity shareholders. So next is 60 paid, correct? So 60 minus 59.965. 60 minus 59.965, 0.035. 0.035 into 7,500 shareholders. That comes to 262 rupees 50 paise. 262 rupees 50 paise. So that is for 7,500 equity shareholders who have paid rupees 60. Paid 60 and lost to be borne 59.965. So 0.035 into 7,500, 262.50. Clear? So now what we are going to do, we are going to transfer that calculated amount here. So I'm going to erase this. I'm going to erase this. Okay. So now freshly I'm calculating equity shareholders. So for first 2,500 shareholders, how much we are giving per share as per the working note? 15 rupees 035 paise into 2,500. So calculate. It is there already calculated, but still one more time, 035 into 2,500, 37,587.50. This is the point. Okay, so next for 7,500 equity shareholders will receive at the rate of 0.035 rupees into 7,500 shares. 0.035 into 7,500, 262, 262.50, 262.50. So now total this 37,587.50 plus 262.50, that comes to 37,850. 37,850. So the same difference what I have written here. So now if you total both the side, you are going to get the same answer, 11,70,000, 11,70,000. Both the side total 11,70,000, 11,70,000. So you can cross check. So once you can cross check with the total. So I'm closing the table. So this is the same old methodology which we have followed. 11,70,000, 11,70,000. So once again reconfirming, 1,70,000 plus 10 lakh put together 11,70,000. And the other hand, so now we will calculate 27,500 plus 39,650 plus 3,15,000 plus 35,000 rupees plus 1,45,000 rupees plus 5,70,000 rupees plus 37,850. 11,70,000. So both the side got tallied. We are done with the problem. Solution for illustration number 14. So I'll be right back with one more problem and solution very soon. Until then, take care. See you soon. Bye bye and stay safe. Bye.